Hello and welcome to today's live webinar where we look at ASX investment opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. The technology that I'm using today is the Investor Signals members area. You can access a free trial by visiting investorsignals.com, and the cost of the service is $1,320 for 12 months. So if you'd like to know more about that, please contact 1300 614 002. The services that Investor Signals provides, we offer the research, which is the Investor Signals membership that I just explained the details on there. Our online broking is our interactive broking account, where you open a broking account in your name. We work as your advisor, and we're able to have your broking account opt in to a number of different model portfolios, as well as running an independent portfolio where we can run individual strategies based on the ideas expressed on the blog. And then we also have a unit trust if you're looking for more of a set and forget approach. So if you'd like to know more about the services, visit Investor Signals and click on the various links there, and it'll take you to pages that will provide you more detail on the services. To set the scene for our outlook on the market and the lead into the analysis of toggling through the opportunities in review today, I thought it might be beneficial to look back at the relevance that the Nasdaq, or in particular the technology sectors, had in the market over the last 10 years. Arguably, it's been the leading indicator that has driven the bull market higher, and therefore it makes sense that whilst we're looking for direction in the market, we take a closer look at the Nasdaq index and set our strategy up around how the pattern evolves in that Nasdaq. So I've looked at it from two perspectives, obviously one from a bearish perspective and one from a bullish outlook. So up on screen there is a screenshot of the Nasdaq as of the close on Friday night. So we've had roughly a 30% correction from peak to trough in the Nasdaq. We've had a rally back, and sometimes this can be referred to as the first test, first fail rule. So that's a reference to the market rallying. So it's the first test of resistance there, it's failed, it's pulled back, and does this level become support, or is this a continuation of the downtrend? So if you're looking at it through a fairly bearish perspective, then the type of pattern that you are watching unfold would be that this is simply a dead cat bounce, and there's further downside in the market, in which case you would be running a resistance line across the recent high there, and then on a shorter term basis you'd be running resistance across the high of the end of last week, and really having a view that you want to be mainly positioning on the short side of the market unless the index started to break back above that 7518, and then eventually start to build on top of that 7518 level, and then again build on top of that, and then that would start to negate that sort of bearish dead cat bounce type structure. If you were looking at it from a more bullish perspective, and I think you need to consider, for the most part, stock markets rise over time. So being too bearish on the market generally doesn't lead to sustained long-term returns. But we're in an environment at the moment where there's little visibility around earnings. It seems that on average most companies are going to have a hit to earnings anywhere sort of 20 to 30% plus in most cases. The market came into this on a high PE. If we look at where price to earning ratios have bottomed on other recessions, there could be an argument that there's another 20% downside in the market. The flip side to that is obviously if we are to get through sort of the peak infection periods and global economies can get back to work, as we're seeing in China and Japan and South Korea, maybe the recession's not as deep as that sort of worst case or bear case scenario. So on that basis, if you're looking at the market through a more bullish perspective and looking for entry opportunities for longer term investments, you're going to be thinking about the market in the way that I've highlighted here on screen, and that is that we've had a correction, we've had a rally back up, we've had a small sell-off from that recovery rally, and you'd be looking for that 7288 level to hold within the Nasdaq. And so they're the two pictures that we continue to track, and I'll update you on the blog as that evolves. But depending on how you want to position around those two alternatives has a substantial impact on certainly any short-term trading positions that you're taking in the market. And for that matter, how aggressive, if you're a longer term investor, how aggressive you are at this point in the market in adding new positions. So just keep those two images in mind as we start to roll through the ASX top 100 companies. So we go into the watch list. I'm going to do two main functions today. I want to roll through the ASX top 100 with a look at identifying the opportunities in review, and then come back and review the stocks that have been posted on the blog as a main focus of today, and then conclude with sort of tying some of that foundation analysis into day trading. So from here we'll go to the ASX 100. We get the percentage gains to the top. We organise it that we're in buy signal. So again, if we scroll through this, what we're looking at is the best performing stock today under buy conditions. As we continue to scroll down, we'll see these buy conditions switch from buy into sell. And then so as I toggle through the charts, you'll see we move through all the buy conditions and then we move into the sell conditions. Starting with Magellan. So Magellan's bounced off this $30 support level, and we're starting to see sort of that, again, first test, first fail, and a bit of buying interest coming in there in Magellan. So if you were looking at this from a shorter term perspective, you'd shuffle a support line up underneath the most recent low, and you'd be willing to have long exposure to the stock as long as it remains above that support line there. And that's just a way of sort of protecting your capital if the market was to reverse back down. A longer term investor may not take that perspective. A longer term investor may simply say, look, this is a good broad-based exposure to an ongoing recovery in equity markets over a 2-3 year period, and be less interested in looking at under a tighter time frame. But I'll be using that as a tool today because it'll feed through into that day trading segment at the end. So Magellan Group bouncing off the support line. ResMed, so this is one of the better performing stocks in the algo model. We're continuing to see ResMed anytime it has a sell-off. The buying interest on any dip in ResMed's been strong for a number of years, and the company's positioning both within technology within that sleep apnea space, and then obviously the actual machines themselves. The company's growing earnings at double digits, and there's not many companies that are achieving that at present. ALS not doing there at present, so we'll just skip through a couple of these. Star Entertainment, so both Star and Crown have gone into an operational business halt, but we would expect within the next 3 months for that to be resolved. Clearly they'll have an impact to earnings, but if we look 12 or 24 months out, the businesses are trading at very low PEs relative to what their future earnings potential is. Altium, so within the technology space there, found support at around 25, starting to trend a little bit higher. So again, we're looking at all stocks under buy conditions. Downer EDI, we're just avoiding that at the moment. Santos, so we've seen these oil names. Last week oil rallied 37% across Wednesday, Thursday on the announcement that Saudi Arabia and Russia were going to reach some kind of agreed production cut. It came as no surprise. These meetings are, if you look back at the history of them, they're on again, off again, and it creates a lot of volatility in the oil market. but in the end they normally do resolve to cut production. So the meeting was meant to take place today. It was delayed. Now they're talking Thursday. The impact that had on oil markets was oil fell 10% overnight. But it's worth just having to think about any weakness that we see in these energy names in the lead up to Thursday may in fact provide a buying opportunity. So that's something I'll keep an eye on and comment on the blog for you. Coca-Cola, that's had a good rally there from $8 up to $10. It's a relatively defensive business in this environment. Seek, so within these technology names, we've looked at car, real estate, in realestate.com, Seek, all as good opportunities, albeit they are impacted by the current market conditions, and I think it's fair to assume that earnings impact is going to be somewhere around 30% to these businesses over the course of this calendar year. But again, if you're willing to sort of look out in the latter part of this year or next year, I think these technology names provide a good buying opportunity. So you may just want to make a note of car, real estate, and Seek, maybe Xero as well, and keep those on your watch list. Beach Energy, probably a preference within the energy names is Santos and Origin, so you can make a note of that. And Macquarie, so within the financial services space, the names we like is Macquarie's at the top of that list. The names that we're cautious on are the big four banks, so NAB and ANZ, Suncorp, and I'll get to those as we move through these, but in particular ANZ and Suncorp we're cautious on. So Macquarie, it's bounced off 70, trading 88. Okay, if you're looking at this from the long side, you may opt at sort of putting in a tighter support line there below the low there of 82.73, and if you're going to have any long exposure, you run a stop loss below that. And that fits in again with that pattern of sort of a first test, first fail, where we're saying resistance has been created at 91, it's pulled back, it's created a support there, and often that first test, first fail is roughly around 50% of the move, so you get an extension higher into resistance, a pullback about 50%, and then you're looking to see whether that support holds and your stops going below that. Cube, so obviously any freight into Australia and the ports is running at low levels, so you're seeing that with the Taronga port in New Zealand. The Cube holdings here in Australia, these businesses are substantially impacted at the moment, but again, looking out 6 to 12 months, these issues will resolve, and I think we'll look back and realise that around this $2 level, Cube was very good value. Oz Minerals, so here's an example of one that I've posted on the blog today. So copper prices are trading roughly 50% from where the high that they created in 2010. Oz Minerals is an interesting opportunity within the copper space because they're expanding their mine in South Australia, and as new production comes online, that profit largely flows through to the bottom line. The capital expenditures programs mostly complete, and now they start to get the benefit of the added production coming through over the next year to year from the next 12 months forward. If you formed a view that copper, after the 50% correction where we're trading at the moment, has upside potential, then Oz Minerals is a good way of getting exposure to that. So again, we have a look at this first test, first fail type pattern in the market where it's had a rally, created resistance at around 780, pulled back to around $7, and you're willing to stay on the long side of this trade, providing that it holds above that $7 support. So if you keep that picture in mind, because at the end, when we have a look at sort of a day trading type opportunity around Oz Minerals, what you're looking for is that same pattern to be reflected in a shorter term chart. But again, for investors that are looking at long-term fundamentals of the market, the story for Oz Minerals and exposure to copper looks to be a good opportunity to add that into your portfolio. Cochlear, so we like this. We're pleased that Cochlear moved quickly to shore up their balance sheet. So they did a capital raising at $140 a share that was fully subscribed. We think that it develops support between this sort of 160 to 190 level, and again into the back half of this year we'd expect to look back and see this as a good buying opportunity for Cochlear. Ramsay Health Care, elective surgery has been put on hold for the moment, which has an impact on Ramsay. They are repositioning the business to assist with COVID-19 patients. But Ramsay's unlikely to deliver any earnings growth at all this year, and it makes the return to normal, but it is a safe haven where investors seeking defensive income will return. So we'd expect that this low here at $50 is being put in for Ramsay, and it probably won't be retested. So we'll see a consolidation around this $59 to say $52 level, but it should find support there and provide a good longer term investment opportunity. As is the case with Cleanaway, I think this is a unique opportunity to pick this business up at a discounted price. It is impacted by the current changes in the economy, but again, if you think out to the middle of next year, we'd expect to see a recovery and return to normal trading conditions for Cleanaway. I like this business because they're positioned as part of the government's initiative around the circular economy with recycling, plastic, aluminium, etc., glass, cardboard. Cleanaway starting to sort of invest in a bit more of a vertically integrated business there, and rather than being just in the collection side, starting to move more into that recycling space, and I think that provides longer term growth opportunities for Cleanaway, and for that reason we like the fundamentals on that from an investment standpoint. Now REA, part of this technology group, it may be that we have a further sort of retest in some of these tech names as the earnings results or trading updates come through, because they're certainly not going to be positive in this environment, but they are an area where I think the market these names will re-accelerate at a greater clip than most of the other businesses in the market. So I think you just need to keep them on your watch list. Again, just revisiting that, it's carrealestate.com, Seek, and Xero's held up better and will continue to do so, but buying the dip in Xero makes sense to us as well. GPT, so these property names are the two areas of the market that are the most difficult to get a sense of what the earnings impact and the potential recovery rate, I think, are the banking stocks and these property stocks. So that's why it makes sense to look at healthcare, technology, and maybe resources as your preferred area of focus in the market for the moment. So not doing there in GPT or Atlas or Sol. BlueScope, so this is interesting, the buying activity that's happened in the latter part of last week, and then certainly again today. So I would look at I would add this to your watch list, and if we think about this from a first test first fail perspective, it rallied up, made resistance at around $10, pulled back, and we've got support there at around $8.55, $8.60, and as long as it stays above that, you would start to give that uptrend the benefit of the doubt. So I'm going to add that to the list of stocks that we look at under a trading scenario at the end of the recording. So BlueScope finding support at $8 and buying interest is a little bit above average there. Caltex, I've spent a fair bit of time covering Caltex in the prior recordings. Wesfarmers, so I found support there at around $30, pushing up to 36. Goodman Group, as I've covered in prior recordings, we like this. It's about the only property stock that makes sense to us in this environment. Their exposure to logistics centres and low levels of gearing make Goodman attractive. So if you're looking for a recovery play in property, that's our choice. AMP, not doing there at present. Xero, so this sits in that technology basket. So again, if we have a look at it from that first test, first fail, it's created resistance at 71, pulled back to just above 50%, found support there at around $65. So if you're looking at it from a shorter term trading, and this is not a reference to day trading, but if you're just looking at it from a trading standpoint, you would shuffle a support line up there and say, okay, well, you're willing to stay long the stock whilst it stays above $65. Not doing there in Challenger or Orica at the moment, or Mirvac. Brambles, so interesting industrial stock here, was growing earnings at around 5%, sold off in line with everything else in the market. Then there was a bit of a rethink by the market as to about 80% of Brambles' pellet business is predominantly consumer staple type products. So the market reconsidered the impact that the economic events are having on Brambles. It may be that that's a little too optimistic, and in a vacuum of good news, maybe too much money flowed into Brambles. So whilst it's under buy conditions, I've just highlighted the correction from $9, I think maybe back into this $12 range, maybe a shorting opportunity. So just keep an eye on that this week. If you see it sort of push up and have an extended sort of day where we do happen to get up to sort of 12 or even 12.50 range, we'd expect to see sort of that come off the highs. I think there's too much good news for the current environment priced in here for Brambles, and I'll update you on the blog as we see that play out. APA Group, so good defensive yield here. This is the gas pipeline business, growing earnings at about 6%. But back at around this sort of 10.50 looks like close to full value for the moment. ASX, we'd expect to see a trading update from ASX in the next week, or in the next 10 days, which will show us the trading volumes for the March quarter, and I think that will be a catalyst for the share price to be strong around that data, but it may be an opportunity to take profit. I'm not sure the next quarter lives up to the volatility that we've seen in the March quarter, and you may see that share price back off a little bit after the good news is absorbed around the latest trading results. ASX is a tremendous business, and for investors looking for safe harbours in the market, ASX makes sense. Trades on just under a 3% dividend yield, and eventually I think there's a strong argument that ASX could be taken over by an international exchange. We've seen consolidation in the global exchange business. It wasn't that long ago we had, I think, Singapore make a takeover bid for the ASX. So whether the Hong Kong exchange or Singapore exchange, I think ASX is in the crosshairs for consolidation at some point in time, especially with the technology work they're doing around the settlement using blockchain technology. Makes them kind of a technology leader within that space, and I think that development adds to the attractiveness of ASX as a takeover candidate. But the time frame for knowing when that's going to play out is very difficult. Woolworths, we like this. I think this is a buy at the moment down here at $35, and I highlighted on the blog that the buy range was $34.50. It pulled back to create a low of $34.30 last week. but it looks to me that it's finding support here and trading higher. So the idea is that we're trying to cover core investment themes that you want to look to be adding to your portfolio. We're trying to sort of cover taking those themes and applying them to people that may be interested in shorter term investment opportunities in the market, and then we're going to add on to the end of that process today something for day trading. And the whole idea is they all fit together, where you're not doing something under one time frame that's materially different to another, and that allows you to sort of look at the market in a more consistent way. Fortescue, so these iron ore stocks, I've been talking on the blog about how strong iron ore's been, and you're seeing Fortescue, BHP, Rio all benefit from that, but Fortescue continues to look strong in a soft market, and owning it at these levels. And the last low was back at $8, but another alternative would be to simply run some type of uptrending support line, I should say, and stay long the stock as long as it sits above that. But I think Fortescue looks like it's going to continue trading higher. CSL, so this is one of the better performing stocks in the algo model. It's created a higher high, pulled back, created the higher low there at around 240, and continues to push higher. And I think given the earnings profile outlook, about 20% earnings growth, or at least 10 to 20% earnings growth, CSL is certainly a bright spot in the market. Not doing there in Dexus at the moment, or Computershare. CBA, we're going cautious on these banks. It's just difficult to really get a read through as to what the true impact to earnings are for the banks at the moment. NAB, for that reason, it's under buy conditions. There's a flag resistance there at 1750, and unless it can break through that, I'm still cautious on the banks for the time being. James Hardie found support there at 1250, so that's been a strong recovery. BHP, so driven by strong iron ore prices and the high probability now that oil is going to put a more substantial base in place this week. So if we assume these production cuts do get agreed upon, we've had sort of that first test, first fail in oil. It rallied 37% last week. It's fallen 10%. So somewhere between sort of that, let's say 10 to 15% correction would be that first test, first fail, support develop, and we'd expect to see oil trade higher. So I'll keep you updated on the blog. I think that has positive implications for BHP. Westpac, cautious there. Evolution, the gold stocks look good, so Evolution, North Star, Newcrest all make sense at the moment. AZJ's back at full value. Our buy range is really back at this sort of 410 level. They have some haulage numbers that'll be out next week or the week after, so we'll keep an eye on those and see what the trends are. TPG, this is a bright spot within a tough market. So TPG at around $7 is a buying opportunity. Ansell, a little bit expensive up here at the moment, so we'll just watch how that behaves. Not doing there at present. Rio, so again, strong iron ore play there, so comfortable holding Rio. Bendigo, not doing there. Coles, Woolworths, I think it's a better proposition at the moment over Coles. Afterpay, not doing there. Qantas, so high risk, but let's just stop and have a look at this. So again, first test, first fail up there at around $3.60. The pullback, does it start to find support here? Now, I'll just watch that and comment further on the blog, but early days for keeping an eye on Qantas. North Star should find support there at around $10, so it looks like gold will probably have another rally from where we're sitting at the moment. QBE not doing there at present. Lumina not doing there. Origin Energy, so if we assume that oil softens a little over the next 48 hours, but starts to firm maybe around Thursday, assuming we get the meeting proceed and the production cuts occur, and sometimes these can be dragged out negotiations, with OPEC, but normally they do get concluded. So we just need to keep an eye on those headlines as to how that sort of positions us around some of these energy names. But there's a good chance that the low for oil prices is already in. Insurance Australia Group getting back to sort of where I see full value at around that 650 level. But if you're looking for income trades in portfolios, one of the ones I spoke about was the buy right on Woolworths. And you could also maybe think about a buy right over Insurance Australia Group. JB Hi-Fi, not there at present. Telstra, this looks like we'll probably see earnings in Telstra. If you look at sort of the other global telecommunication companies, they're forecast anywhere from a 10 to 20% fall in earnings. So if we assume something similar for Telstra, maybe a little less, maybe it's more at that 10%, we should be at a point where at around $3 Telstra is able to find support and trade higher over the next 12 months from that level. Newcrest, so the level that I've marked out there as a stop loss is around 22.50, but it looks like a support's been developed there in Newcrest, and I think there's a pretty strong argument that is deserves to be in portfolios at these levels. Oil Search, I think there at present. Aristocrat. So Aristocrat carries a little more risk than the other technology names that I've added in, but you can certainly put that in the watch list as well, but it's further down on my list of preference. So Transurban, there's one that I'll keep a track of and comment on the blog this week. I'm just watching to see at what point here we get a strong bullish reversal day. So if you look, Transurban's traded from $9 up to a resistance there of 13. It's corrected about 50% of that, and just maybe sub $11 I'd expect to see buying pick up in Transurban. Same there with Sydney Airport, so maybe sub $5 we start to look to see whether buying interest builds there. NIB Holdings at around this sort of $5, it looks full value to me, given sort of the earnings miss that they recently had, where earnings were meant to come in at 180 million, came in at 150 million. So I'm just not sure what the catalyst for that to suddenly re-accelerate on that earnings front. Car sales are all part of that technology basket. Times are difficult at the moment, but 12 months out we'd expect some a return to normality. So I think in those strong tech brands, there's still an argument that you want to have those on your watch list and be looking closely to add those into your portfolios. So Lendlease, so within that property space, just difficult at the moment. Amcor, a little like Brambles, so this has had a good rally as a number of analysts have viewed that a lot of their packaging is around consumer staple or products that are delivered online, and we've seen a significant rebound. I just tend to feel that maybe that's a bit optimistic, and like Brambles, if we see an extension up into that sort of $13 to $14 range, it might be an area that sets up for a short, and I'll keep you posted on the blog. Sonic Healthcare, so in all likelihood the impact of Sonic Healthcare earnings is around 20%. Puts the stock on about a 3.5% dividend yield down here, and looking out 6 months, a return to sort of norm. Sonic's probably a business that will re-accelerate back to normal trading conditions fairly quickly once the restrictions are removed. So at around sort of this $21 to $22 level, Sonic looks appealing and is one that you want to make a note of. Medibank not doing there at the moment. Charter Hall. So now we've switched from the buy conditions into the sell conditions. So at this stage what I do is, rather than having support lines under the charts, I put resistance lines in place. So let's just move through these and talk about which ones are under sell conditions. So 9, obviously it's rolled over from the original. So we'll move through these fairly quickly, given that not everyone runs a shorting position in their portfolio, and I'll just flag the ones that. So Crown like Star, risky, but the longer term recovery prospects there are quite good. Worley Limited, so you think about that as a resistance at a 750. So these become a greater focus if we go back to this screen here. If we're looking at the market from this lens where we think the Nasdaq is actually going to find resistance at 75.18, then it's natural that you're going to be more interested in the shorting positions in the market. If you're looking for this pattern to play out, then you're going to be more interested in the buying conditions in the market. And this week on the blog, I'll make a point of really tracking this so we can, so you can use that in your thinking as to how you approach the stocks that you're most interested in. Incitec Pivot, so some resistance there at around 220. Bank of Queensland, so all these banks still cautious on them, and ANZ. So you can see here that I've marked this as resistance. So if that pattern in the Nasdaq resolves in a negative way or in a bearish way, then the two stocks that seem to stand out to me are ANZ and Suncorp on the short side. So you may wish to make a note of that. Stockland still cautious there for the time being, as with WiseTech. So CIMIC Group. I've spent a fair bit of time talking about CIMIC in prior recordings, so we'll move past that today. South 32, not really doing anything there. Woodside Petroleum, so again within that energy space, on the long side our preference is Santos and Origin. If you're looking for something to trade over a 2-3 day window in the lead up to the meetings with Saudi Arabia and Russia, Woodside may actually be a short that you want to keep an eye on. So you've just got the stochastic pushing into overbought territory there, resistance up at around $21, $22, and any downside move in the stock probably would not be much more than 2 or 3 days before you'd want to close that out. So Suncorp, we'll just stop there and have a look at this as well. So like with ANZ, if that Nasdaq picture resolves to the downside, then I think both Suncorp and ANZ come under pressure. The losses within the banking sector are likely to be, I think, more significant than the market is currently pricing in. If we have an extended recession, and that'll show up in the earnings here of Suncorp and ANZ. So I've flagged that as resistance at around 960, and just looking to see that struggle below that, especially if that Nasdaq picture plays out under that bearish scenario that we're looking at. AGL's reasonably defensive in this environment, so looking for that to hold up for income plays in portfolios. Not doing there in vicinity. Scentre Group, so again just really hard to get visibility on what the earnings look like for these large property, not just retail but also the office trusts as well, where they're having issues on rent settlement, and it's hard to understand what that impact ultimately looks like. Boral, I've flagged a resistance there at the moment at around say $2.35 thereabouts. But if you think back to the GFC, one of the strategies the Australian government did was provide stimulus for new home construction, and Boral was a direct beneficiary of that. It's a way that the government can help kickstart the employment market in a direct way, and it's often a preferred tool by the Reserve Bank of Australia. So at some point I think Boral will be in the middle of that policy response. It may be a little bit early at the moment, but you want to keep an eye on it. But for the time being, I've just flagged resistance there at around 235. A break above that's going to be bullish. We may be in the early stages of sort of that first test, first fail, and pull back, and around sort of $1.90, $2 may be a good buying opportunity. But for the moment, I've just flagged that overhead resistance there in Boral. Treasury Wines, So this is one that we looked at just to see whether this, so it is in a downtrend. So we look resistance here at around 1050, and I've just put a support there at around 955, and we're looking to see if that continues to trade above that level. And there we are, back to Magellan. So what I want to do next is go through these blog posts. So coming into the watch list, selecting recent blog posts ASX. This stores the blog post for the last 30 days. So again, we'll organize them in percentage gain, put them in buy order, and let's just move through these. And I'll move through these quite quickly because they're mostly ones that we've already covered. But the idea of the blog is it's the blend of technical and fundamental analysis that highlights the stocks that that we think are the sort of higher conviction opportunities in the market. So ResMed, we're bullish on that. Ramsay Health Care, bullish there, albeit the turnaround's going to be a bit slower, given that they don't normally have high level of earnings growth anyway. But from income investors in the market looking for defensive income in a low interest rate environment, Ramsay should be a beneficiary of that. So, comfortable there. Cochlear, we like that. ASX, we like this name, getting up to a level where it's a little bit expensive. Watch for the March quarter trading data volume to come through. Coca-Cola, at around $10 is back to fair value, but a defensive place. Maybe it's more of an income buy right strategy where you can drive maybe up to 10% cash flow from the dividend and the call option income and be pretty comfortable that the downside risks are fairly limited. Woolworths finding support at $34.50. Again, you could approach this from an income point of view where you're running a buy right strategy. Buy the stock, sell covered calls, collect the dividend. Woolworths looks a little more attractive than Coles. Brambles, watch this. I think it could easily have a sort of an extended rally where it puts on $1 or $2 if we have a bullish breakout in that Nasdaq. At that point, I'd argue that Brambles is getting expensive and will probably set up a short-term resistance or trading opportunity. APA Group, we like this. Good quality business, growing earnings about 6%, getting back to about fair value where it is there at the moment. REA Group, these tech stocks are going to get hit short-term in the earnings. We don't know yet whether the market marks them down again on that basis, but 6 months out, 12 months out, I think they return to strong levels of growth. Any recovery in the market, these names are likely to have outsized returns to the upside. Cleanaway, I like this from a long-term fundamental story, not really a high growth business, but defensive and a good long-term fundamental story behind it. Gold, the leading gold names, Northern Star, Newcrest and Evolution are worth having a look at the moment. Horizon, we've got haulage numbers out in the next week or so, but at around this sort of 470, 480 looks to be back at resistance and not really doing too much there. Newcrest, I'm a buyer of Newcrest at these levels. Rio iron ore's held up well so far. We continue to keep an eye on it just in case the spot iron ore prices run into resistance, but for the moment Fortescue, BHP, Rio all look like they're holding up quite well. Coles, we'll take a look at that if we see a sharper sell-off, but Woolworths is our preference. Car, part of that technology basket that I've spoken at length about. Sonic Healthcare, add this one to your watch list. If there's a little bit of selling over the coming days in the market and you get to pick this up at around $21.50, I think that's a good buy, and I'll update you on the blog. Amcor, similar to Brambles, it's been a bit of a crowded trade where money's flowed into US dollar earners that have a slightly defensive characteristic to the business. That's Amcor, Brambles, and maybe they're getting a little bit expensive at the moment. Suncorp, if that Nasdaq pattern resolves to the downside, we've got to be cautious. Two shorts that I think you want to have ready are Suncorp and ANZ. CIMIC, not doing there at the moment, but just mindful that they certainly operate in the right space within the infrastructure area. There's a limited number of shares on issue. The parent company's been buying back shares, so just mindful of watching that. Treasury Wines, just keeping an eye on that, really more from a shorter term trading standpoint. And then there we are, back to ResMed. So just to revisit the notes that I've got, so maybe you should have made a note of Newcrest on the gold side, Woolworths, and that could be just an investment or a buy right. On the energy side, Origin and Santos, but keep an eye on the OPEC meet or the Saudi meeting on Thursday. Boral, longer term recovery in the market, but the catalyst will be Reserve Bank providing stimulus, and I think we're months, 2 or 3 months away from that. Telstra at around $3. I think that's got to come onto your radar. Sonic at around $21.50. On these tech names, CAR, REA, Seek, Oz Minerals, don't forget to mark that one down. So longer term, if we think copper, after a 50% correction, copper's probably pretty close to lows. Oz is expanding their production, so I think add that one to your list. And then the other one on that technology space is Xero. Okay, just bear with me for a moment and I'll bring in the screens to start having a look at this day trading segment. Okay, so thinking about the market from a day trading perspective, and the reason why I've bothered to cover this is there's a lot of people working from home at the moment, and in some cases with a little more time on their hands, and we've had a number of inquiries just talking about strategies for shorter term trading and in particular day trading. My approach to any shorter term window in the market is to try to keep the technical approach similar to what I would be referencing when looking at the market from a longer term investment standpoint. And the benefit of that is sort of one strategy enhances the other rather than sort of trading in multiple directions too much. So I like to start even from a day trading standpoint by doing what we just did, which was toggling through the daily charts and making a list of companies that appear to have stronger momentum than others, and then that narrows down the group of stocks that you then may have an interest in from a trading standpoint. And from trading, I tend to think that's across multiple days, and then obviously if you're interested in it from a day trading standpoint, it's taking those same patterns and looking at them down to a 24-hour type pattern within the market. So all this is still predicated on an overall view on the market. The idea is you need to be getting as much of the momentum in your favor as possible. So it starts with having a view either on the sector that the stock is in, or just global markets in general. Are we in a risk on or a risk off period in global markets? So bullish would be risk on, and then bearish would be risk off. So if we were to have a view that the market in the case of the Nasdaq, is going to resolve in a way that this 7288 level is going to hold, then we might be looking more for day trading opportunities. And an example that I'll look at is Oz Minerals. So if we're looking at it through this lens, we then bring in, say, the XJO here and look at it under a number of different time frames, but at the moment I've got it under a 1 hour time frame. So the index has had this correction down, it's rallied back up. What we're now looking for is this first test, first fail. So by that, again, what I'm referring to there is a rally up into resistance. That becomes the first test where it's failed. It's had a correction. The correction's roughly 50% of that move, which is fairly common for it to find support, especially if it's going to resolve. So you've had the downtrend, you've had a breakout, you've had the 50% first test, first fail. It's rallied back up. Now it's tracking sideways at the resistance here. So what I've done is put a support under these lows, and you could trade. So this is an hourly graph of the XJO or the ASX 200. So you could take a bullish view on the market with a stop loss below these lows here. Now if you're wanting to narrow your risk even further, you might come down to, say, a 30-minute or 5-minute chart, and the pattern's still the same. So this is, but you may run your stop loss, under that low there. So you're always trying to create a structure that supports the direction that you're wanting to trade in, and then it just becomes a function of how much risk you're willing to take on with managing your stop loss. And if we take that down even further into a 5-minute chart, so on a 5-minute chart, you would say you would be long the XJO and that provides, I might just change the color on that. Just there. Sorry, just having trouble with this. Okay, not sure you can see that all that well, but there we go. And hit OK. So again, this is the XJO. We're down to a 5-minute chart. So this morning it opened up strong. We've had a slight pullback from around, say, 5,225. So it's corrected about 50 points intraday. Tracking roughly around lunchtime in the market at the moment. It found support there at around 75, 5175, and it's pushing back up towards the session highs. So your stop loss could go at that 5175, and you're simply staying long the index, or in this case the ASX 200, until such time as it tracks below that. Another way to think about it is running a trailing stop loss using a moving average. So you could overlay a moving average, and a break below the average acts as your stop, or you keep shuffling your stop up higher under each of these candles. So again, this is a 5-minute chart, so it's very active, and if you're trading with a 5-minute chart, you may find you're in and out of the market a number of times throughout the course of the day. If you go back to, say, a 30-minute or a 1-hour chart, you might be more likely just to have the one trade throughout the course of the day. Each time the index makes a high, creates a new support, it's worth shuffling your stop loss up just to sort of tighten that up and protect the position. What you're trying to do here is catch a breakout move in the market to the upside. And if we go back to the daily graph, the reason why you're bothering with that position is that you're forming a view that the index has had a correction, it's rallied up, created resistance, it's pulled back, you've identified your support there, and you're just simply looking to participate in what you feel is sort of the market building on top of that. So if we go back to this Nasdaq type position here again, the pattern's very similar. First test, first fail, pulls back, finds support, is the market going to build on top of that? So an investor may take a view that he's just buying into the market because it's cheap on historical standards. A trader might look at it and say, okay, well, I'm thinking this support's going to hold and I'm going to buy it and simply stick with the trade as long as it stays above that, and they may catch a good recovery which they hold in for days or weeks. A day trader will use this same basis, or this is my recommendation of it, use the same basis, but will be holding the position only until the close of the day. So again, if we come back into this graph here of the ASX 200, so similar to the Nasdaq, first test, first fail. We're thinking 5,000 level in the index is going to hold. We're trading 5,200 at the moment. We go to the 1 hour chart as a start, and we say, okay, well, there it is there. That's that 5,000 support level in the index. It looks like the buyers are pushing the market higher on the close on Friday and then again into today. We've shuffled the stop loss up a little bit tighter here at 51.75, and we're going to stay long this until the market trades back below that. And then if you're looking at it where you're willing to be in the market, so the view there would be that you may be holding this as a long position, and at the end of today you're just simply going to close it out. So two events are going to occur. Either the market's going to reverse back down through that and you're going to close it out during the course of today, or you're going to let this rally right into the close and shut it out so you're not holding any exposure overnight. And that would be the common strategy of a day trader, is to generally not hold risk overnight. So that was on the 1 hour chart. If we go to a 5-minute chart, there it is again there. So you're looking at that same support level, 51.75. The original sort of on the index was back down there at 5,000. So you see the patterns are still the same, support there and staying long, and then it's really just up to you from a risk management standpoint how often you shuffle your stop loss up under sort of these pivot kind of lows, and the next one there would be sort of 5,200 for me, is where I'd be running a support under that. So it may be that you've entered the trade at lower levels here, and to protect your profit you're shifting that that stop loss up into that point there in time. Now the other one that I want to have a look at is Oz Minerals. So let's just I'll take this out and we'll go back to the day chart of Oz Minerals. So the pattern is the same as what I've been discussing. It's the first test, first fail. It's rallied up, found resistance, corrected back 50%, and we're seeing buying interest on top of that 50% level. So that's what we're now looking at and checking to see whether that buying interest continues. So that's the base pattern, and then we bring in the trading perspective, and we'll go through this and just break those time frames down. So there's the support there at roughly $7. First test, first fail, pulls back, starting to see buying interest off that support. So now we go from that down to say an hourly graph, and we can see the support there at $7, an extension up to $7.40, and then down to the 5-minute chart. So there was the bounce off roughly that $7 level, and then in today's activity we've not long after the open made a high there at around $7.44, pulled back, made a low of around $7.32. So you could now take a trend line and put under that level there, and that then becomes your stop loss. So again, by going down to a shorter time frame, you're shuffling the stop loss up a little bit tighter, and in this case you're looking at the low from that, which is $7.32. So you're taking risk on by being long Oz Minerals above 732, and you're going to shut that out going into the close today. So from a point of view of covering the, and then so they're two long positions. Let's just have a quick look at the shorts that we identified during the recording there. So Suncorp was one on the short side. So from here you're going to do the same thing in reverse. So if we go back, let's look at the day chart of Suncorp. And we're cautious that the Nasdaq, so in order for this to play out, what we're looking at is that bearish view in the Nasdaq. So we'd need to see the Nasdaq run in a resistance at 75.18 and move lower, and that sets up the broader trend for the market. So there's no point, in my thinking, there's no point focusing too much on short trades if the Nasdaq starts to resolve in that bearish pattern. So it's critical now that it's at that kind of first test, first fail level, is to watch how the global markets start to unfold from these levels. But if we see resistance build at 75.18, then your short positions in Suncorp and ANZ. So you got resistance there in Suncorp at around 930 for round numbers. We've had a sell-off, it's had a bounce back. We've got new resistance there at around 915. You could create a resistance line there at 915. And you would be short Suncorp into the close today as long as it stayed below that 915 level. If the Nasdaq is negative tonight and that bearish sort of pattern is playing out more, then tomorrow you're going to be focusing more on the short side of these, Suncorp ANZ trades. So a little bit to cover there today, jumping around from investing, trading into day trading, but hopefully you can see the overlap in the methodologies that are used, and on the blog throughout this week, I'll highlight both the investments and the trades that that we see as presenting the best opportunities in the market. Thank you for listening in, and if you'd like to take a closer look at the member technology that we're using, please contact me using the details on screen.